Today, we're going to take a quick look at 4 semiconductor stocks to watch this month, not called AMD or Nvidia. I know you guys watch my channel and I know you guys love how much I talk about AMD and Nvidia, but I wanted to give those two a break. I wanted to take a quick look at some other semiconductor companies that I think are pretty interesting, especially at these levels. Let me just say, before we take a look at all 4 companies, they're all profitable. They are all pulled back a nice amount from all-time highs, and personally, I enjoy every single one of them. So in today's episode, we're going to take a quick overview on some of their highlights, take a quick look at fundamentals like I mentioned, and if this is your first time, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. All right, so now let me give you the 4 stocks, right? You might be like, Jose, what are the 4 stocks? I know you're lying to me. I know you're going to talk about AMD and Nvidia. You have to. This is an episode about semis. That's all you do. Well, even though I already did, I think I mentioned their names more than the companies I'm going to talk about so far. The 4 we're going to take a quick look at are ASML, Taiwan Semiconductors, Qualcomm, and Applied Materials. And we can see all of them are off a nice amount from their all-time highs. Qualcomm is down over 10%. We can see Applied Materials is down over 20%. Taiwan is down over 22%, and ASML is down over 26% from their all-time highs. And all of these are, I want to say, in different markets within the semiconductor industry. As we're going to see, Applied Materials and ASML, these are 2 that provide equipment to the manufacturers of semiconductors. If we go down the list, we're going to take a quick look at TSMC. This one is a manufacturer of semiconductors. And finally, we're going to take a quick look at Qualcomm. And honestly, I don't know if that's going to be the order. Maybe it might. But then we're going to take a quick look at Qualcomm, one that but designs these chips that go into the technology that we use on an everyday basis. Some other things I did want to mention is, hey, these 4 are profitable companies, right? They're all, if we take a quick look at EV to EBITDA ratios, they're all sitting pretty attractive, all sitting at cheaper levels compared to about 12 months ago. And I want to say we can see some of them are looking pretty attractive, but we'll see what kind of growth they're seeing. So first, let's start off with ASML. So ASML, like I mentioned, they are ones that provide equipment to the semiconductor industry. We can see in their most recent earnings breakdown, most of the revenue comes from 2 segments, the EUV, extreme ultraviolet, and then they have the R5. This is just direct ultraviolet. Both these markets represent over 80% of total revenue, and these 2 are products that are dealt during the manufacturing phase of semiconductors. So we can see this is one of their products right here. This is one of the extreme ultraviolet, and then we have the direct ultraviolet products. Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. I do want to say ASML does sell a very limited amount of products. For example, in the full year of 2021, in the whole year, they only sold 286 new machines. It's that the reason being is manufacturing, semiconductor manufacturers, there's not a lot of companies that do that. And this product is so hard to make that they're pretty much in a monopoly to do it. So even 286, these products sell for very, very expensive price, and they have very high profit margins. So I do want to say maybe one of the risks that some investors might worry about is, hey, what if manufacturing companies start to slow down on the purchasing on the products? I do believe that could be an issue in the short term of things, but nothing to really kind of be worried about in the long term of things. All right, so the second company we're going to take a quick look at is AMAT, Applied Materials. And this is another kind of manufacturer equipment. We can see here some of the products that they do. They also help during this stage of manufacturing of chips. I do want to say during this manufacturing stage, there's numerous products that are needed. So even though both ASML and AMAT are creating equipment for manufacturing, it's not like they completely compete against each other. They all have the reason for being. So both of them, they might kind of in sort of products, there might be some products that overlap, but the main products that each company owns are different from the other. So it's not really much competition there. If we take a quick look at Applied Materials market outlook during their most recent presentations, they say in 2021, wafer equipment investment was around $80 billion. They expect 2022 to be 100 billions or more, led by foundry logic growth. So right now it's definitely a great time for these equipment manufacturing companies. Like I mentioned, that kind of risk that, hey, what happens when some of these foundries start to slow down? At the moment, it doesn't seem like that's the case, but obviously that can change in the next few quarters. So something to keep in mind of. The third company we're going to take a quick look at is TSM, Taiwan Semiconductor, and these are the manufacturing of chips. So let's say you design a chip, you go to Taiwan and you're like, hey, I want you to make mass produce my chips, right? And that's what they pretty much do right now. This is traded on the ticker TSM. We can take a quick look. One of the impressive things about this is they do kind of share monthly revenue. They have yet to share their February numbers that should be coming out maybe next week. But for January numbers grew 35% compared to same time last year, and they grew 10% compared to December. So they saw a 10% growth month to month, which I think is pretty insane. I do want to say right now, manufacturing companies do have a kind of I want to say pricing power option because everybody wants chips. So because everybody wants chips, the demand is high. With demand high, they're able to set prices at higher levels. So I do believe that's one of the main reasons we're still seeing strong increase in revenue. Again, another risk is what happens when this shortage kind of slows down. Pricing power might go away and revenue growth might not be as big. Like I mentioned before, I do believe the cyclicality is not going to be as long as it was in the past, but we can still see some short-term pain. And as an investor, I am prepared for that. We can take a quick look. TSM, there's numerous of other manufacturing companies out there. And I want to say, it doesn't necessarily mean they all compete against each other. Certain semiconductor manufacturers are meant for certain type of chips. For example, we can see TSM. Some of their biggest players are the 28 nanometers, the 16 nanometers, the 7 nanometers, and the 5 nanometers. The 7 and the 5, those alone make up 50% of total revenue. TSM is really a leader in the advanced technology, and those are usually the smaller type chipsets, and that's seeing a nice growth rate there. Another thing I want to show is TSM does mention the type of products that their chips go into. The biggest ones are the smartphone and the high performance computing. These are your data centers, these are your PC chips. So we can see this is the market that they're seeing the most in, but they are seeing huge growth in the automotive market. Now, the final company we're going to take a quick look at is Qualcomm. So Qualcomm is different. This is pretty much at the end of the semiconductor list. This is one that designs chips, and their chips are used in pretty much anything. So their products are being used in automotive, mainly known for their 5G chips, their Snapdragon processors that go in a lot of Android devices. Now they're also being pushed into computers as well. They recently did a presentation on February 28th. There was kind of like a technology event in Barcelona. And they mentioned a nice amount of products. Here we can see that the Snapdragon process is going to be used in connected cars. So we can see they are improving their solutions in automotive. Smart cars are, I want to say, are going to be one of the huge growers within the next 10 years. They're also released new products for the 5G market, another market that I believe will continue to grow with things as Internet of Things continue to grow, smart cities, smart cars, and just smart automobile and smart infrastructure that is needed. Another news that I wanted to mention is Qualcomm is expanding their Snapdragon into the computers. Qualcomm, we can see, hits different markets, the handsets, RF front-end, automotive, and Internet of Things. Even though automotive is such a small section, I do believe this is going to be a high grower throughout the next 5 to 10 years. So those are the 4 companies. Some final things I wanted to show you guys is, hey, profit margins, right? All of these are profitable. Even though recently they are seeing a bit of growth in profitability, I do want to say that profitability growth is due to the shortage of semiconductors, so they have that pricing power. But prior to the shortage, you can see these companies were profitable, so something to keep in mind on. We can see quarterly year-over-year growth. They are seeing strong growth not only during the semiconductor shortage, even prior to 2019 and early 2020, they were still growing at some decent levels. Finally, I just want to show that all 4 companies that we took a look at today, if you add their cash and their cash flow from operations in the trailing 12 months, it's much higher than their total long-term debt. So fundamentally, I do want to say all these companies are stable to withstand any type of market for the next few years. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.